Okay, we knew that back here, or top of the month, I should say. We knew that down here. Actually, right after this big move, I actually said 110.50. Because I'm eyeballing that, right? And I remember it too because in this big event, in the big move, you know, we had a live audience going and somebody said 110, and I'm like, why would you say 110? Besides the psychological level, you know, the real resistance is at 110.50. I remember saying that. And it's the monthly. So anyways, I think that's pretty cool. So if M4 is your top, what is the bottom supposed to be if you're using pivot point theory? M2. Yeah, so the textbooks, right? The textbooks actually say if this is your bottom, the predicted top is there, and that's it. That's the whole range. Right? If this is your bottom, this is your top. I think that's just wondrously fabulous. So now we got our big event, and you know, the Fed raising interest rates, or not raising interest rates, or maybe raising interest rates more than we thought. Whatever. Today's event could move the dollar, right? But the textbook moves have taken place, which I think is pretty interesting. So are we going to end today at 1? Are we going to, you know, yeah, 24 hours from now, will we touch 103? What do you think? So why would it drop from 109 to 103? See, to get that to move that far, you're going to need new money. Okay? So what's going to bring the new money in, right? And it would have to be that we learn that they're going to raise rates faster than the market thought. And we have to now price that in. Now, Cliff CV says interest rate hike. Well, we already know that. It's already priced in. Right? So what don't we know? And I think what's more plausible is that we resume, and that's what we had talked about earlier, that we just resume the downtrend. The daily Stokes looks ready. We're kicking off resistance. It's, you know, the other thing that I had marked out for you guys, you know, and this was days ago, but, you know, things like roll reversals. I mean, it's all there, right? So if things go planned, we just resume direction. Okay. And the direction could last for a while because the Fed is likely to slowly but steadily increase the interest rate. Right? And the ECB could continue a monetary policy that would weaken the euro, right? So this could continue for quite some time. So I don't think it should be a quick move. It could do anything it wants. The velocity I can't really tell you about. But, you know, the central banking divergence and all that stuff has been going on all year. But look when the big move was. right? Taper at the top, then the quantitative easing. And then really sideways action since March, really. Breakthrough, pop, maybe some resumption, huh? Maybe a nice little move, nice little breakout, fine. Warren says, how do you think they will raise it today? Do you mean by how much? Or how? I know exactly the mechanism how they raise interest rates. So I'm not sure the question. Yeah,